and other derivatives and other contracts and Apple stock. It's a probabilistic thing, and you got to have a portfolio view. But the interest rate in Argentina right now is 49% overnight. And the official inflation rate is probably 60, and the unofficial inflation rate is 80. And so you have a different view toward probabilistic risk when the ship is sinking and you're about to lose everything in 36 months. So I would say with regard to Bitcoin, Bitcoin is an interesting, nice to have, and an intellectual discussion for people in Western Europe and the US and the developed world with a strong currency losing 7% of its value a year. But Bitcoin represents a life raft to the billions of people in Sri Lanka and Lebanon and Turkey and Argentina and Venezuela, not to mention the ones in Cuba and North Korea that have zero property rights. And of course, half of the world or more has capital controls, right? If you look at that blue dollar rate, what you'll find is that the official rate, what about the 4 billion people that are, that are unbanked? And what about the other 3 billion that don't happen to be in the top billion elite? What about them?
Right. So I agree with everything you said. My difference, I think, is why we are seeing this type of consumer price inflation. So I want to focus just on the United States for a moment, because that's where I have data. So Michael, when you're talking about fiat currency, are you talking about fiat currency, or are you talking about currency like M2 increases where the money supply is backed by gold, or maybe in the future backed by Bitcoin? Because
when
I know
I
a lot of
refer
people
to fiat,
conflate those two things.
if I refer to fiat currency, I mean, the king of fiat currencies is the US dollar. It's the world reserve currency. And then the strong currencies that are linked to it are like the euro, et cetera, and the yen. And then you have the weaker fiat currencies, the Argentine peso, the Venezuelan bolivar, the Lebanese, and can replace portfolios of stocks as a long-term treasury asset. I think that everybody in the world, as long as they're nation states, you have to respect the Argentine government, and you're going to have to pay your taxes in the peso, even though you don't like it. And then you got to respect the US government. The USD is going to be the world reserve currency. In China, the CNY is going to be strong. So in Europe, as long as the European Union lasts, the euro is going to be a player. So the right way, I think, for us to think about it is, what portion of your monetary assets are sitting in dollars? What portion is sitting in pesos or bolivar? And what portion is sitting in a liquid treasury reserve asset like Bitcoin? And then what portion of your wealth would you have invested in buildings and stocks and collectibles and derivatives and bonds? And the answer to that is different for everybody, depending upon how much money they have and where they reside in their citizenship. And also whether you're a corporate entity or you're a family or an individual is different. How you balance the assets. And if I was giving advice to an Argentine, I would say hold a month to 2 months worth of pesos, and then hold a year to 2 years worth of dollars, and hold a few decades worth of Bitcoin if you had to hold only liquid assets. I would not recommend you have $1 million of Argentine real estate, but I would recommend you have $1 million worth of Miami Beach real estate. And if you go up and down the beach here in Miami, you'll find that most of the condos and most of the real estate is owned by South Americans. And I used to wonder why. And now I know exactly why. It's because you take $1 million in Argentina in the year 2000 and you put it into $1 million of real estate in Miami Beach, you've got $10 million worth of real estate today, which is worth 4 billion Argentine pesos. Right. And if you kept it in Argentina, you've got 1 million pesos. So 4 billion versus 1 million, it's a pretty big deal. It's a factor of 1,000 difference. And so I that's how I view it. I'm not really hung up on hyper Bitcoinization and the end of debt and, governments as we know it. I'm going to stick with the governments for now. So Bitcoin is going to demonetize that second investment home. It's going to demonetize gold. It's going to demonetize maybe ETFs and some stocks. But and ultimately, maybe it's going to demonetize some bonds. but it's going to be a long process. It's going to take a couple of decades,
So,
3
okay,
decades, and then
yeah, but let's go forward there. If Bitcoin doesn't take over from the dollar, how does Bitcoin fix this chart that we're looking at right here?
yeah, Bitcoin's not going to save the dollar from continuing losing value. Bitcoin is just going to allow you to not get poor.
No, I understand
Right?
that,
Like if
but
you want to get rich, you have to own property. And so Bitcoin is property that the middle class and working class people can own everywhere in the world. And otherwise, they're going to be destitute. So Bitcoin is a solution to the individual and the corporation. Bitcoin is not going to eliminate the euro, the yen, the won, and the dollar. They will all continue. And I think that it's idealistic to think that somehow all of the world's problems get solved in the next decade with Bitcoin. That's not true. But what is true, credit system where the value is draining from societies, it's draining into society's goods, making them more expensive
right,
because the currency is demonetizing. And
right,
under a Bitcoin standard, you're building on a sound, virtuous money, and the value is draining into society's money, making the goods less expensive. And that's true. It's going to take 30 years. I mean, it's a lot. Again, coming back to this, if Bitcoin became, went from 400 billion to 4 trillion to 40 trillion. When it gets to 40 trillion, 100x from where it is right now, it's starting to put material pressure on a bond market, which at that point will be 200 trillion dollars, right? So you're still only chewing into 10, 20, 30% of the bond market. Now, how fast we get there, it's probably 20, 30 years. So in the year 2050, I think that the idea is we're not gonna have a jolting revolt or a revolution in the economic system. That's not good for anybody, right? I mean, that happened in the Soviet Union and in Cuba, and we know, and North Korea, know how that ends. That's not good. What you want is a gentle progression, or a progression from a fiat system that's crumbling on corrupt credit. You want to progress from, and by the way, the stocks and the rest, they're all currency derivatives. So in a world where there's $250 trillion of USD currency derivatives, the US Federal Reserve can print an extra $2 trillion, and that's like 1% of the currency base. So they can do quite a lot of money printing with impunity. If that, we know intuitively, right? What would happen if every foreign nation sold their U.S. sovereign debt? If the Chinese sold all their debt, the Japanese sold all their U.S. Treasury bonds. If no one outside the U.S. held the dollar, then when we printed a lot of money, we would see double the inflation rate.
see Argentina.
And 1980, we saw it, George. In 1980, I think the dollar was maybe 40% of currency transactions. And we know the Soviet Empire had its own currency, and there's the German mark, and there was the Turkish lira. You had lots of other currency systems, and not everything was trading against the dollar. I mean, the Indian economy was closed, the Chinese economy was closed. In that environment, we managed to create 18, 19% inflation in the US. We had to take interest rates to 19%. Why is it? Because instead of printing an extra $5 trillion and spreading it across $100 trillion of other people's money, we printed the money and we spread it just among American citizens.